Hi, my name's Laura from Crypto Tax Girl, and lately a lot of our clients and other people online, Twitter, in my emails, Reddit, have been talking about receiving different letters from the IRS. So today I wanted to make a video walking through them. There's a bunch of different letters that the IRS can send, but these ones specifically that we're going to go over are letter 6174, 6174A, and 6173. If you've received one of these, you already know what they are. If not, I'm going to go over them, and I'm also going to walk through what they mean, what you need to do, how we can help, and why you even got this letter. So the first thing I want to go over is, why did you get this letter? So the IRS has actually made crypto one of their top enforcement priorities in the last few years, and they use a bunch of different tools to try and increase that compliance when it comes to crypto tax, and these letters are actually one of their main tools. This isn't the first time that we've seen these letters. The first time we saw these letters was back in the summer of 2019. I remember we had a ton of clients and just other taxpayers get these. There was a huge wave from the IRS because they had a John Doe summons from Coinbase that brought in a ton of information that triggered these letters. And then now, all these years later, they've continued to send them slowly, but there's another huge wave happening right now. It's kind of been going over the last few months, which is why I wanted to make this video, because I keep getting questions about it. So what is a John Doe summons? We probably should answer that question first. So a John Doe summons is basically like an information request that the IRS sends to different cryptocurrency exchanges requesting information on their users. Because as you know, to date, like, crypto has been a self-reported asset. You usually don't get a 1099, you don't get any sort of documents. You have been calculating it yourself. And as we know, not a lot of people have actually been doing those calculations and reporting crypto on their tax return. If you're one of my clients or you do it yourself, great, but a lot of people don't do it. I think honestly just due to the confusion and the complexity of reporting your crypto taxes. But all of that is about to change because in 2025, exchanges are going to start issuing the 1099-DA, which is basically a tax form that you're going to get similar to if you traded stocks and you get a 1099-B. It's going to be a tax form that explains what you sold, when you sold it, the price it was when it was sold. But that's just like a video for another day, honestly. We don't need to get into all of that. But the IRS is increasing compliance, and these letters are there to fill in the gap of everything up until 2025. So like I said, the IRS has been trying to capture all of the reporting that has been missed over the last, 5 to 10 years. And so they're issuing these John Doe summons to all these different crypto exchanges, and then they're providing them with information. And then actually, by a requirement, when the IRS receives information from a John Doe summons, they have to do something with it. And so these letters are the response to that. And there's 3 different letters, each with a different severity. So it kind of just depends on how much you held on the exchange, how active you were, how long you were on the exchange to determine which letter you got. And the John Doe summons that I know that have happened are Coinbase, Kraken, Poloniex, and Circle. Then there's also some banks like SFOX, Safra Bank, and I think there's more out there, and there's probably more to come. But those are the ones I know for sure. If you were on any of those exchanges, especially like maybe 5 years ago, you're likely going to get one of these letters. So let's go through each of them and explain the differences between them, what you need to do if you received them. And if you did receive one of these letters, I'll put the timestamps below so you can just kind of skip to that one and see what you need to do. So let's dive into the first one. Okay, here is our first letter. This letter is the letter 6174. So this one we're going to start with first because it's the least severe and also the most common. So if you receive this letter, this basically is the IRS telling you, we know you have crypto, and that's kind of it. Like, it's basically saying, we know you have crypto. If you haven't reported, report. If you have, then you're all good, kind of is what it's saying. And so it's asking you to kind of take the accountability onto yourself. You're the one that has to do the action of checking your previous return, see if you reported it. If not, doing the accounting for it, getting it all cleaned up yourself. But the one thing to note on this is the IRS doesn't intend to follow up on these letters. So this is kind of just a warning letter, and also something that the IRS is going to put in their toolbox so that if, let's say, you were getting audited later, and you're like, oh, I didn't know I had to report crypto, they can use this letter as proof that they told you that you need to report your crypto. So let's kind of go through the letter and I'll explain the different parts. So this first one, it's the first line is basically just saying like, we know that you've had one or more accounts containing virtual currency. So virtual currency, digital assets, these are all different words that the IRS uses for crypto. And they say here, but may not know the requirements. So again, it's like might not have reported or might be, committing fraud. No, it's nothing that serious. It's just like you might not know the requirements. So we're going to tell you now. So if you believe you didn't accurately report your crypto, then you should either file amended return or delinquent returns. Basically, like if you never filed a return that year, now is the time to file it. And they kind of then go below and explain all the reasons why you might have needed to report crypto on your return. So one, if you had a sale, exchange, or other disposition of crypto. So that's if you sold it for US dollars, if you sold a crypto to crypto, like you did an exchange of crypto, or if you disposed of it, meaning like you used it to buy something. So you paid for something using crypto. They're saying all of these are reportable. Also, if you receive payment in crypto, so if you were a contractor, if you had a business, anything like that where someone paid you crypto, let's say you're like a YouTube person, people give you tips in crypto, just anytime you received a payment in crypto, that would also be considered reportable. And then this one's less common, but if you receive crypto through like someone paid you that in their rental, like if you own a rental property and they paid you crypto for their rent, or if you have like a partnership or an S Corp, trust, anything that paid you crypto and you received crypto from, that goes on Schedule E, less common again, but they're saying, hey, you might not realize, but this actually also needs to go on your return. So they're just kind of walking you through, educating you here. They tell you what to do if you didn't report it. If you want to file an amended return, you need to just write letter 6174 at the top. You need to go back and calculate all your crypto transactions for all the previous years and then report each year that you're delinquent or didn't file your crypto. And you can see here at the bottom though, it says you don't need to respond to this letter. So let's say you're like one of my clients. You've worked with me for years. I've done your crypto calculations for you every year. I filed your tax return. You don't need to respond to this because like I've taken care of you. You're good. But if you receive this letter and you're like, oh shoot, like I actually have been meaning to get around to do my crypto or didn't know I was going to get caught, now's the time to do something and actually do your calculations. The one thing I will note though here is that you want to consider the statute of limitations. So if you've never heard of that word, that basically is a period that the IRS can go back and audit your returns, request info on your returns, send you notices on returns for. And the statute of limitations is 3 years from the day that the return was due. So right now, we are in August of 2025. And so the statute of limitations actually is only 2022 returns and forward. So the reason why is because a 2022 tax return was due on April 15th of 2023. And then that it's been 3 years. We're still in the 3-year period since that, where a 2021 return was due April 15th of 2022 and 22, 23, 24, 25. We're past April 15th, 2025. So if you filed your return on time in 2021, the IRS actually can't go back and audit it unless there's there's actually 2 exceptions. So one is if the amount that you underreported is more than 25% of your income that year. So for example, I was just working on a guy's tax return and he reported like $10,000 of income. I think he was like a student. So he had like a student job and he reported $10,000 of income on his like 2020 return. So 2020 right now is outside the statute of limitations. But he had $400,000 of crypto gains that year that he didn't report. And that is obviously more than 25% of his income that he did report. So the statute of limitations actually extends for 6 years, if that's the case. So if you have any of those years that you maybe like in 21, 2020, or 2019, that you didn't report your crypto and the gains or income from crypto is more than 25% of your income that year, you'll also have to extend that. But let's say like 2017, during the bull run, you made a ton of money and you didn't realize you needed to report crypto. We're technically outside the statute of limitations. And the only exception to that one is if the IRS can prove fraud in that you like intentionally didn't report your crypto and you did know that you had these obligations. So like, for example, me, if in 2017 I was making videos, 2018, and I was educating people and teaching people that they needed to report crypto on their tax returns. and then I personally didn't report crypto on my tax return, like I would be considered in that fraud category because like clearly I knew my obligations and I didn't do it. But some people didn't know, and I understand that you didn't know, or your accountant gave you bad info. So if it's anything prior to 2019, you might be outside the statute of limitations, or you are outside the statute of limitations. And unless there was fraud, I wouldn't worry about it. So 2019 and above, look at, especially 22 and above, look at. And also know when you're reporting and calculating your crypto transactions, you're not just calculating for 1 year unless like, so let's say for example, I'm like, oh, I need to do my 23 amended return and my 22 because those ones are in the statute of limitations. But you've been in crypto since 2017. You need to go back and do your calculations from 2017 to now because anything that you've acquired prior to 22 or 23, like let's say you bought something back in 2018 or 2019, we need to know the cost basis on those because then when you sell them, that's going to determine the gain or loss. So it gets messy, especially if you've been in for a long time. And if you need help with these calculations or with amending your return or with responding to this letter or anything, like feel free to reach out. I'm happy to help. But if you have been reporting your crypto and you know that it's accurate, you've reported everything, then there's nothing to worry about for this letter. You can just file it away and move on with your life, sleep well at night. So hopefully that helps answer your questions on 6174. Again, this is the lowest level, but now I'm going to go over 6174A. Okay, here is our second letter. This one is 6174A. So this one's kind of the middle letter. It's more intense than the 6174, but less intense than the 6173. So you'll see actually that it's almost identical to the 6174. So they have information that you have accounts containing one or more accounts holding crypto. So virtual currency in this case is the IRS's word for crypto. So you can see that's actually the exact same line. You have one or more accounts containing crypto. But the difference here is this one says you may not have properly reported your transactions. So this one's a little more intense because the previous one says may not know the requirements, but this one is kind of identifying you as a non-compliant taxpayer by saying you may not have properly reported. Again, it doesn't say definitely you haven't reported or we know that there's a mistake, but they're like, we've identified you as potentially being out of compliance. So the rest of the letter is exactly the same as the previous letter. It says here, if you didn't accurately report your crypto transactions, you should file an amended return or a delinquent return. So again, if you haven't like filed your return in the previous years, maybe you didn't have income or for some reason you're behind on your filings, you should go and do it if you haven't reported your crypto. If you have reported your crypto correctly in the previous years, you don't need to do anything for this one because let's just scroll down to the bottom here. You don't need to respond to this letter. However, we may send other correspondence about potential enforcement activity in the future. So you can see this one's different. This one just says like you don't need to respond to this letter, but this one says they might send additional correspondence. So you're kind of on like the next list up where as soon as they get through these more intense 61731 ones, they're going to be coming to you because they're like, we're pretty sure that there's some non-compliance happening here and we're going to follow up. So again, we don't know for sure that they're going to follow up. There's no call to action really and no deadline that you need to respond by, but they might follow up later. So just keep that in mind. And again, the rest of the letter actually is exactly the same as the 6174. So it's kind of educating you a little bit more that you must report all sales, exchanges, and dispositions of crypto. So if you sold crypto to US dollars, if you converted one crypto to another, just, through a trade, or if you use crypto to purchase something. And then here, if you receive payment in crypto through your business as an independent contractor, as a tip, any way that somebody's paid you with crypto. And then the last one, again, these less common ones, S-corps, partnerships, real estate, rent income, anything like that that would go on Schedule E, all of that is considered reportable and should be reported on your returns. So I don't want to keep repeating myself, but again, if you just only skip to this one, maybe go back and listen to the previous one because just to keep in mind which returns you might want to amend. So you'll want to amend for sure, just to go through it again. If you haven't reported correctly, you'll want to amend 22, 23, and 24 if you've already filed it. And then 2019, 2020, and 21, you'll want to amend if your income or gains that you didn't report from crypto are more than 25% of your income in that year on your original filed tax return. So this is called the statute of limitations. I just went over it, so go back to that. But those are the years you kind of want to look at. And then the other thing to note here is, again, if you need to report crypto on your tax returns, you're most likely going to have to go back and calculate your gains and losses from every single year that you've been in crypto so that you have your cost basis all in there. You have all your income, you have all your trades, you have your current holdings. It's kind of a big, messy process the first year that you do it. But after you do it 1 year, every year you'll have that data and you'll just kind of add to it. So if you need help with that, if you need help getting started, if you need help doing your entire crypto tax report, we have thousands of clients. We've done a ton of these letters and we would love to help you. So feel free to reach out, or if there's something you can handle yourself, there's obviously a lot of DIY tax software. So take a look at both. We usually use coin tracking for our clients. You can do cryptotaxgirl.com/coin tracking if you want to try it out. I think it gives you like 10 or 20% off if you use that. But again, no pressure either way. Just use what works best for you, because next year when we have those 1099 DAs for your 2025 tax return, you're going to want to have all your ducks in a row anyways and have that all cleaned up, because you're going to receive these tax forms, the 1099s, and you're going to need to know your cost basis. So there's no point in really delaying it at this point, because you're going to have to do it at least in a few months from now. So just get your ducks in order, take care of this notice, and then you'll be good to go, like going forward. Okay, so that's 6174A, and the last one is 6173. So let's go through that one next. Okay, here we are at our final letter. This letter is letter 6173. And if you got this letter, I am sorry. That sucks. This is definitely the worst letter out of the 3 to get. It's the most intense. It has the most call to action. But it's okay. I'm going to walk you through what you need to do. If you got this letter, we've helped clients with this letter before. We'd be happy to help you. But you'll definitely want to get going, because there's a lot of things that you need to do for this letter. So let me just kind of go through it top to bottom. So this one, it says that basically we know that you had 1 or more accounts containing crypto. So they know that you have crypto. It's actually the exact same first sentence as the other 2 letters. But then it changes here where it says you may not have met your US tax filing and reporting requirements. So again, it doesn't say for sure that you haven't met them, but this one is basically saying, like, we're pretty sure that you haven't been reporting your crypto correctly in the previous years. I actually have had clients who have reported it correctly, but they just had such a high volume of transactions or such a high amount of crypto invested that the IRS just sent this letter kind of as like, you know, a catch-all to everyone that was in that higher category. So it doesn't necessarily mean that you're not in compliance, but there is like more work on your end to do in response to this letter. So it goes on to remind you that crypto tax or taxpayers are required to report all sales, exchanges, and dispositions of crypto. So again, to go over this is sales of crypto to US dollars. This is exchanges, like you sell, you know, you trade one crypto for another, and then on an exchange, DeFi anywhere, and then dispositions of crypto. So that is like when you use crypto to purchase something, pay for goods, services, other property, anything you use to use crypto as like currency, basically like how it's maybe intended or whatever. So it just walks you through that. And then it actually here doesn't go into all the other stuff that the other 2 forms or the letters had, where they go through the income amounts, the Schedule E amounts, like if you receive crypto as payment, if you had rents, S-corps, partnerships. But I guess it doesn't matter, because like you're going to have to fully report all your transactions to the IRS anyways. But let's just keep going. Okay, so for 1 or more tax years, 23 through 17. So this one, actually, the years could be different on yours. This one is just an example one that they have on the IRS website, but this could change depending on what it says for you. So it might have different years on that. It says we haven't received either a federal income tax return or an applicable form or schedule reporting your crypto. So basically like your Schedule D, your Schedule 1, your Schedule C, Schedule E, like anywhere that crypto would be reported, they're saying we've checked all these schedules and there's no crypto on there. So where is it? So this is what you need to do. They'll have a respond by date up here. It's usually like 30 days from when you receive the letter. So you have to act quickly. And it says, what you need to do by that date. So you need to file delinquent returns. So if you haven't reported or filed your previous tax return, don't worry. We have a lot of clients who are behind on multiple years and need to go and file not just this year, but previous year's tax return for the first time. So you'll want to go and file those and put your crypto transactions on them, obviously. And then if you have reported your return, you filed your tax return maybe just with your W-2 or your 1099s, but you didn't include crypto, then you'll want to file an amended return to include the crypto. I've actually even had clients who have reported their crypto, but they didn't report the correct number. I love when they've over-reported and I can help amend them to help them under-report and say, hey, you reported too much. We actually can help you get a refund. But if you haven't reported your crypto at all and you had any sort of gain or income, then most likely you need to file an amended return and pay a little bit of tax. But you can see here, it even says you need to calculate your income, gain, or loss. So even if you had a loss that year, I know a lot of people come to me and they're like, oh, I know I lost a ton of money in 2019, so I didn't report my crypto on my taxes that year because it was a loss anyways. They're actually saying even if you had a loss, you need to amend your return. So just keep that in mind. And then obviously, whether you're reporting your delinquent return or filing an amended return, you have to go back and calculate your gains and losses on every year that you've been in crypto and then figure out which years to report. So this one's tricky because it's saying you do need to file something and we're going to check up on you, but you need to keep in mind the statute of limitations. So I actually went over this in the 6174, but I'm just going to go over it one more time in case you skip to this one, just because it is really important. So if you received this and you need to go back and amend returns, you want to consider the statute of limitations. So you'll want to look at years 22, 23, and 24 need to be fully in compliance because we're in what's called the statute of limitations for those years right now. So that means it's the previous 3 years and it's the 3 years that the IRS can go back and audit your returns, look at them, request information on them. They can fully do that for those 3 years on any sort of amount. The 3 years before that, which is 19, 20, and 21, the IRS is actually limited on those ones to only auditing it if they know that more than 25% of your income wasn't reported that year. So let's say, for example, you made $100,000 and you reported just your W-2 income on your return, $100,000, and you filed it. But you had secretly made $1 million in crypto that year, then you definitely are going to open the statute of limitations for those previous 3 years. So your statute of limitations goes from 3 years to 6 years because you have underreported your income that year by more than 25% of whatever was on your original tax return. So just keep that in mind. That's an important distinction. If it's you didn't report in 2017 or 2016 or 2018, and those years are outside the statute of limitations, then reach out to me because the only time you would want to actually amend those is if you think that you might be considered for fraud. There's a lot of things that go into this. So reach out to me before you amend those years because they're outside the statute of limitations, but we also want to make sure you're covered and that the IRS doesn't come back and try and prove fraud on you in those years and the previous years and just keep that statute of limitations open till the end of time. So it's kind of a tricky one and it depends on your facts and circumstances. So again, just reach out to me if you have years before 2019 that you might be worried about. I know 17 was a big year for everyone, so just let me know. And then, okay, so that's what you do if you haven't reported. Again, just go over, you need to calculate your crypto gains, losses, and income for all your years. Then you need to file an amended return or file your first time filing returns if you're not up to date on your filings. Okay, and then if though you're no, I actually have filed my crypto on my taxes and I know I'm in compliance, then you need to follow this next step. So this one's a little bit big, but you need to provide a complete history of your previously reported income from your crypto transactions and copies of your previously filed documents that confirm your compliance. So you need to basically be yes, look, on my 2021 return, I reported $100,000 of gains. Here's proof of that. And here's how I calculated that $100,000 and provide the full history that sums up to that $100,000 of gains. So there's a little bit of work there. Again, if you're going to do this route, you want to make sure that your stuff is pretty clean and that you have all your transactions reconciled and everything. So if you get this, maybe reach out to me for help if you need help with this. I'd be happy to walk you through it. You also need to include this statement that basically says like, I declare under penalties of perjury that this is legit and like I've included everything that I should have reported on my return. So if you're going to sign this and send it, make sure you really know that you are in compliance. Again, if you want me to double check or just do a quick consultation, you can always go to our website and we can help walk you through that. And then here's, the info on where to send it and everything. And you'll see right here, if we don't hear from you by the respond by date, so that's the date they'll have on there, we may refer your tax account for examination. An examination can be an entire full audit where they're not only looking at crypto, they're looking at all your income, all your bank statements, multiple years, and it can be very messy, very expensive, and a lot of time. So I would definitely recommend getting this letter taken care of by the date. If you need more than the 30 days, you can call and request an extension, and they might give it to you. So something to consider there, especially if you reach out to a crypto tax accountant like me, and it takes some time to kind of go back and forth, collect all your data, especially if you have a lot of years involved. So we might request that extension if that's needed. But that is basically all you need to know. So high level 6173, make sure that you respond by the respond by date. Make sure your previous year returns are all like super cleaned up and good to go. And if not, then let's take care of them now. So that is the last letter there. Let's go and kind of wrap up this. Okay, I think we hammered it home with those letters. We went through everything that you need to do, the differences, and I think you should be all set if you got one of these letters and know what your next steps are. But I just want to drive home. I know that getting an IRS letter is a little bit unsettling. It's not the greatest feeling. It takes a lot of time to take care of. But if you did get it, try not to ignore it. Try and take action, because the quicker you do that, the less mess you're going to have later down the road. As I mentioned, the IRS is going to have the 1099 DA next year, which is also going to help the IRS identify some non-compliant taxpayers. It's going to force people to report crypto on their tax return. And if you get that next year and you only report it in 2025 and you haven't reported anything prior, it may cause the IRS to, scratch their head, look at your return some more. And if they pair that with the fact that you got a letter and then that you didn't report and now you're reporting, it just creates a case against you that could potentially come back and haunt you later if the IRS decides to audit you. Other things that they look at is whether you checked yes or no on that question about whether you had crypto that year on your tax return. So all these things the IRS is just using to kind of figure out taxpayer patterns and determine who's compliant, who's not, who's been reporting, who's been avoiding compliance. So the quicker you get in compliance, the faster you can just wash your hands of this and not worry about it anymore. And just know that with all these 1099 DAs and other forms coming up, that you're fully in compliant. So again, I'm not trying to scare you. I'm just trying to help you and educate you on these forms. If you need any help at all, we would be happy to help you. We do everything full service, from doing your entire crypto tax report, your entire tax return, your amended returns, helping you with the letters. Or if you even just want a consultation to talk through your situation or want us to review your crypto tax report, anything, we're not really a standard package. We can just help you where you're at and meet you with whatever needs that you have. So feel free to go to our website, click below, and we'd be happy to help you. But yeah, good luck. I hope that helps. And I'll come back with more videos about other updates later.